Alright, hi guys, welcome to another video. This is going to be just another quick trading tip. This one's about mean reversion. So I have created several mean reversion strategies over the years. The basic idea is that when a market pulls away from its mean, it's eventually going to snap back and come back towards that average. So there are plenty of examples of mean reversion that investors and traders use. So you might buy a stock when its PE ratio drops really low to like 10 or something like that, thinking that it will go back to a more normal ratio of 20. Or you might buy a stock when the stock price has dropped 20% over just a few days, thinking that the price is oversold. Or you might use a technical indicator like RSI4, buy a stock when the RSI is under a low number like 20. That normally signifies it's oversold and it will revert back to the mean. And yeah, in the past, I've used strategies that rely on RSI4 dropping below around 20, and they can work really well in the right setting. And as always, you can see some of my systems on my website at jbmarwood.com. Okay, but the point of this trading tip is not to explain mean reversion. The point is to talk about the one thing you need to make a good mean reversion trade. Okay, and that one thing to make a good mean reversion trade, in my opinion, is that you need things to stay the same. So what I mean is, there's normally something that's happened to your stock. It's normally something that's happened to the stock to make it drop 10% or 20% or whatever. Now, if it's dropped for a real reason, like a structural change, cycle change, if there's been some real game-changing news, then the chances of that stock snapping back to the mean and giving you a profit for your trade is smaller. When this happens, you get momentum, you're more likely to get a trend, and this is obviously the enemy of a mean reversion system. Okay, so here's a good example of what I mean with Tesla. You can see from the chart that Tesla pulled back significantly. The stock dropped around 20%. The RSI is gone under 10. Okay, so this is a clear candidate for a mean reversion setup. As you can see, the stock does rebound sharply. RSI4 moves quickly above 70, and we can take a nice profit on this trade. So this is really the perfect mean reversion trade. Now this is a good example because when Tesla dropped, there was some negative news, but for me it wasn't big news. It wasn't the type of structural news that's going to have a long-term impact on the business. You know, there was talk about some missed targets. There was issues with automated driving. I think Elon was on Twitter, and the overall stock market was also weak. But really, there was nothing significant to say that things have really changed with the Tesla business. That's what made this an excellent mean reversion setup, because we've seen a big move, but really not an awful lot has changed. We've seen a big drop, but nothing has really changed, so therefore the market's more likely to spring back. Now, if we compare this to a stock like General Electric, we've got a totally different picture. Now, you can see from the chart, GE has been steadily falling. RSI is consistently low. If you tried the mean reversion trade on this stock, you'd be holding it for a long time, waiting for it to snap back, because it never snaps back, and you would have lost money on this trade. And again, there's a reason. And the reason is that GE is undergoing significant structural change. The company has been severely mismanaged. It's made some very bad decisions and acquisitions, and it's been losing money. Those aren't things that can easily be reversed, and so it shouldn't be a surprise that the stock price hasn't reversed either. So I hope with those two examples you can see how price can rebound or it can keep going. Often it depends on the news involved. And that's the tip for today. Mean reversion requires things to stay the same. You don't want a structural change when making a mean reversion trade. Okay, so that was the tip for today, and now I would like to look at a little bit of market analysis. So turning to the market today, we did get a small rally in the S&P 500, in the S&P, but it really wasn't convincing. Now, I did say yesterday that I think really at the moment negative sentiment is dominant at the moment, which is why my recommendation then and still is to sell rallies. And it looks like we've had another bit of bad news coming from Trump about trade deals just over the last couple of hours. and the market's selling off again as I speak. So this isn't a particularly good sign for the market at the moment. I won't be surprised to see another sharp red day tomorrow. So yeah, that's my take on stocks at the moment. We seem to be getting a lot of negative news coming out. I won't be bullish until that stops. So yeah, don't jump in yet. It's my advice. Keep a bearish bias at the moment. All right, that's it for now. Thanks for watching this video. See you soon.